Well, good morning. Yes, it's me, Kenny Polcari, your host of the party. And mamma mia, is it hot out here today? And the sky is a stunning blue. So maybe that tells us how the market's going to react today. In fact, we just got the PPI number. Came in weaker than expected, which is actually better, right? Because the numbers came in up 0.1% month over month when they were expecting up 2. So that's a better number. And then across the board, if you look down year over year and all that stuff, it also came in better. So that's going to support the argument that the Fed's got it under control and there's no need for panic and emergency rate cuts and all that stuff. So let's get going. Today is Tuesday, August 13th, 2024, and here are the things that you need to know to get your day started. So, like I said, the markets awaited today's PPI. Yesterday, they awaited today and tomorrow's PPI and CPI report, which is indicative of where inflation is going. Home Depot reported this morning they beat, but the stock is down 3% as the trader types just punish it. Oil rallies, gold rallies, and the dollar weakens a bit. Volatility subsides. But like I said, don't count it out just yet. And there's more economic data all week to take in. So let's just take it one day at a time. And what do we have for dinner tonight? It's not really dinner. It's a side salad. It's a spinach salad with grape leaves and feta. It is delicious. Okay, so stocks came to a halt, struggling for direction as bonds rallied and all as investors remained on the edge of their seats awaiting the latest inflation data after last week's roller coaster ride, right? The Dow falling 140 points. The S&P ended really the day flat. The NASDAQ up 35 points. The Russell fell by 18 points. The transports lost 85 points. And the equal-weighted S&P fell by 34 points. The TLT ETF, which is a 20-year bond proxy, rose by 0.3%, while the TLH, which is the 10 to 20-year bond proxy, rose by a quarter of a basis point, leaving the 2-year yielding 4.019% and the 10-year yielding 3.9%. Oil surged up and through $80, and gold pierced 2,500 to end the day at 25.12. All on fears of the geopolitical Mideast conflict spinning out of control. Inflation data begins today, and all that's doing is curbing the appetite for risk until we get a better sense of where we're going. After what happened last week, many investors are refraining from making more bets until they get a clearer message about what the latest economic data is going to reveal, and then speculate on what the Fed's next move is. Okay, let's be clear. There's not going to be an emergency meeting or an emergency rate cut between now and September. Absolutely not. September is going to bring us a 25 basis point cut, or at least it should, right? Not anymore. I don't believe the Fed's going to push a 50 basis point cut unless, of course, the data suddenly falls off the goes off the rails, right? And JJ most likely is going to indicate that the trend now is lower, and that the new range is ultimately going to be 4.25% to 4.5% once we get there. Again, unless, of course, we go off the rails between now and then. But let's be honest, even those rates are going to do nothing to bring down the cost of food, utility bills, insurances, education, housing, etc. In fact, lower rates is going to send housing higher. What will bring down these prices? Well, a good deep recession, but something which I don't think appears at least on the horizon yet, or is part of the narrative, right? Next, the unrest in the Mideast is also causing angst, and that's reflected in what we saw happen in the price of oil and gold yesterday. Oil shot up through 80 on the idea that the conflict breaks out and the supply of oil could be disrupted. Again, think through the whole Red Sea Suez Canal thing with the Houthis and the Hezbollah and all that stuff. While gold shot higher in the classic safety trade. Geopolitical conflict always causes investors to run into gold as a safe haven play during times of unrest, and that's just what we saw yesterday as well. This morning, both are under a little bit of pressure after the moves. Oil, because the IEA now tells us that the oil markets are poised to swing from deficit to surplus next quarter if OPEC Plus presses ahead to boost oil production beginning in October the way they've announced. In addition, the IEA is also once again telling us that Chinese demand is weakening. Oh, it's such an old broken record. So if OPEC Plus continues down this road to raise production, then the surplus created is going to only put more pressure on oil prices. Clearly something the Saudis do not want. This morning, oil is trading down 20 cents at 79.84 a barrel. Gold is down $5 at 24.98 as traders take some profits after the 3.5% move up over the month of July, right off the lows at 24.25. In addition, the markets remain hopeful that the Israeli-Iran conflict is not going to explode and diplomatic efforts will change the path of that conflict. Gold is always sensitive to coming inflation data, and if it appears that we're on track for cooling inflation and lower rates, then expect gold to resume its ascent. Remember, lower rates equals a lower dollar equals higher gold. The dollar is now about 3% off its July high of 106. It has broken through all three trend lines, is now testing levels seen last January and March at 103.30. Look, it's a good time to just sit back and take stock of where we are, and based on what happened last week, and look at the best names that came under pressure, right? For no other reason than the angst and nervousness that it created. And you can find them all over the place after last week's debacle, especially in tech. The XLK was down 18% last Monday, but has rallied back by 6%. Nvidia was off 30% on Wednesday, but has rallied back by 10% and only going higher, and was really the sole reason that the NASDAQ advanced yesterday. Apple sold off 16% and has since rallied back 10. Microsoft down 17%, has since rallied back 5, and therefore, in my eyes, is still a screaming buy. Amazon down 25%, has rallied back by 10%. And how about the financials? The XLF sold off 7% as of Monday last week, rallied back by 4%. JP Morgan was down 11%. It rallied back by 8%. Bank of America down 20%, has gained 9%. That's another name that I love. So therefore, I think there's still another long-term opportunity. Citibank was down 18%. It took back 8%, and the list goes on. And what do these names all have in common? They are the biggest names in their respective industries. Yeah, they get sold, but they tend to snap right back as long as their story and fundamentals do not change, right? Did you know, by the way, did you notice, and I've been saying this all along, did you notice what happened in consumer staples and utilities? Two of the most boring groups that you can imagine? Yeah, they hardly moved during last week's volatility. Why? Because they're not sexy. They are boring. Nobody really wants them, but you actually need them because they're defensive, right? And that's exactly why you need to have them in your portfolio, because they are defensive. Kavish? Now, if you're a day trader, trade away. All you want more chaos because that's what you want. But if you're a long-term investor, you should be adding and looking at the names that go on sale, right? You should not be selling them when panic strikes unless, again, their fundamentals change. In this case, none of it changed. In any event, do not discount more volatility in the weeks ahead. Today's PPI and tomorrow's CPI, if they come in better than expected, then could signal that if they come in much better than expected, much weaker, then it could signal that we're in for a recession, not a soft landing, right? And if inflation rises, then it's going to tell investors that the Fed may have to stand down and do nothing, something which I don't think is going to happen. In fact, did not happen. The PPI came in just a little bit weaker than expected, right? I think the numbers will be just this way, and that means that we're on our way for a 25 basis point cut in September, period, the end, no matter what the trader types are screaming and yelling about. Home Depot reported this morning, and they beat, but the stock is down 3% in the pre-market. Why? Because they warned of a slowdown going forward in their forward guidance because of a cautious and a tired consumer. Today's focus is all about the PPI, and like I said, it's expected to come in slightly better, and it did, than last month. And that's going to be a win for the Fed. And it's going to continue to support the current narrative of that 25 basis point cut in September. Tomorrow it's the CPI, the July CPI. And then later in the week, we're going to get real average hourly earnings year over year, real average weekly earnings year over year, retail sales, industrial production, capacity utilization. And Friday finishes the week with housing starts and building permits, always a key indicator in the markets. Now, U.S. futures are up this morning, and they're up even higher than they were, right? Dow's now up 40, the S&Ps are up about 20, NASDAQ's up about 120, and the Russell is flat, right? European markets are struggling for direction as well. The UK unemployment is expectedly fell to 4.2%, while economists expected it to rise to 4.5% in the second quarter, and that throws a monkey wrench into the Bank of England's plans to continue down the path of lower rates. UK wages grew by 5.4% year over year, apparently the slowest in 2 years. UK inflation is due out tomorrow. Expectations for that to tick up to 2.3%, up from 2%. So that's, again, moving in the wrong direction. The S&P closed at 53.44, essentially flat from the day before. Now it's only down 5.5% off the July highs after being down more than 9.2% last Monday. We're now in between the intermediate and short-term trend lines at 53.14 and 54.50, right? I think that we're going to run into resistance at 54.50 and then test lower again as the market continues to repair the damage caused last week. Global markets continue to struggle to create stability after the shock. While volatility has declined do not dismiss it just yet. Markets will remain on the edge as we move through the next 3 weeks of August. Many participants are on vacation and volumes are going to remain subdued, and that only exacerbates the move up or down, running into the Jackson Hole Central Bank boondoggle that takes place at the end of August. In the end, again, like I say, be confident in your portfolio, become a bit more defensive, but if good names become significantly oversold, then you have to take advantage of that. Make sure you know what you own, and in times like this, talk to your advisor if you're concerned, and in any case, feel free to give me a buzz at 212-381-6194. Okay, so what do we have for dinner tonight? So it's not really dinner, it's summertime. This is a great summer salad. It's easy to make, it's different, it's refreshing with a nice barbecue. It's chopped spinach salad with green grapes and red grapes. Mix them up, crumbled, feta cheese always finishes it off, right? It's easy to make and one that works really well, like I said, at a summer barbecue. It's light, it's cool, and it's a real crowd pleaser, right? And for this, you need pinoli nuts. You need fresh baby spinach, which you're going to chop. You need red and green seedless grapes, which you're going to cut in half. You need feta cheese. You can also use ricotta salata if you want, but the feta adds a little zing. And then you have your choice of either strawberry walnut vinaigrette or a raspberry vinaigrette, something that brings out the fruitiness in this summer salad, right? In the grapes and stuff in the summer salad. Now, you want to toast the pinoli nuts on the stove in a frying pan just for about 5 minutes. You want to get them just nice and golden toasty. In a large bowl, you're going to add the chopped spinach, the grapes, which you've sliced in half, and the feta cheese. Season it with a dash of salt and pepper, and then toss it with either the strawberry walnut or the raspberry vinaigrette, whatever you decide. Don't mix them, it's one or the other. Make sure that the salad bowl is cold, though. Use a metal one in this case, right? And put it in the fridge and get it cold, because that keeps the spinach crisp. And green, right? Serve this with grilled chicken or your steak, quick and easy, and it's always great for summer entertaining. Trust me, it's simple to make, it looks great, presents beautifully, and if you keep it in a nice cold metal bowl, it always works great. Listen, it is an absolutely spectacular day here in South Florida. Let's hope it's another spectacular day in the markets. Until tomorrow, I am Kenny Polcari. Take good care.